All right, welcome back. A big call from Goldman Sachs on some of the big industrial machinery companies. Let's start with the old cat tractor, Caterpillar, upgraded by Goldman to a buy with a new $168 target. Firm saying they see favorable risk reward. It is your call of the day, Jim. You own it. I would imagine then that you're not exactly going to disagree with this call.
Sorry, yeah. No, look, I think he points out some good things here. It's trading in the middle from a price to earnings multiple, the middle of its range. It's not at an earnings recessionary trough level. It's not at a mid-cycle peak level. He thinks it can get a 25% multiple upgrade. I agree. Why do I agree? Because of what he points out there is that dealers have been bringing down their inventories for the past several quarters. The headlines of that look terrible when Caterpillar reports earnings. Revenues don't meet expectations because dealers have been drawing down their inventories, but that sets them up to start filling their inventories again. Hate to repeat this, but this is a second half of 20 mover. I think you want to get in it now. I'm happy with it where it is.
Yeah, although I will say this, the analyst there, Jerry Revich, saying that one of the key risks to the call, they think that inventories are trough, right? So that's good. Pricing may be firming up. Asia growth. There you go, right there.
It is. So if Mr. Farr here, my colleague, is correct, and we're talking about the coronavirus in May, we're going to have a problem in Caterpillar, and we're going to have a problem with a lot of other stocks.
By the way, Michael, you're scaring people. I got people on Twitter saying, what is he talking about, a recession?
The risk of recession increases with this, is what I said.
You're not saying we're going into recession?
I am not. But the risk, I think, if this continues for a long time, actually the risk comes back. I haven't seen a risk of recession anywhere for years. Right? I mean, I just haven't. And when you get...
We did have an inverted yield curve in August.
Yeah, and I didn't buy it. But 3.5% unemployment and rising wages and free money, to Steve's point, that solves most every ill everywhere. But there's a potential for a slowdown here. And one of the things that can really risk to a market is complacency. It's when everybody says, no, that's not going to be a problem. No, we're going to be fine. And when they get louder and louder and louder about how fine you're going to be, I get more worried.
Fair enough. If you believe some of the scary estimates on the spread of the virus, then you might feel that way. By the way, Goldman in that same call also making positive comments on Cummins, CMI.